Missiles fell, screens lit up, and Bitcoin collapsed. In a single morning, the digital world was rocked by a geopolitical firestorm. The United States launched a strike on Iran's nuclear sites, and, well, Bitcoin dropped below $100,000. The market didn't just panic, it hemorrhaged. Today, we're diving deep into the shock, the psychology, the fallout, and the future of this crypto crisis, and what you need to do before the next flashpoint hits. It all began with a single headline: US strikes Iranian nuclear facilities. In the blink of an eye, oil spiked, stocks stumbled, but the biggest shock wasn't in traditional finance, it was in crypto. Bitcoin, the so-called digital gold, collapsed violently. For months, Bitcoin had flirted with six-digit glory, but the moment war began, fear flooded the market. Traders hit sell, liquidations fired. In minutes, the $100,000 line shattered. This wasn't a correction, it was a purge, a digital earthquake, a test of conviction for millions. Because Bitcoin is liquid, it trades 24/7. No market hours, no circuit breakers. When fear hits global markets, Bitcoin becomes the first asset on the chopping block. Institutional bots pulled the trigger. They weren't waiting for nuance, they saw war, and they sold risk, fast. Within seconds, liquidation engines kicked in. Over-leveraged traders were wiped out. Billions in open interest vanished. The price plunged, not from weakness, but from velocity. This wasn't about fundamentals. It was about capital preservation in real time. The only thing more contagious than fear is speed. Fear doesn't knock, it kicks down the door. Telegram chats turned into panic rooms, Twitter spiraled into chaos, influencers screamed, "Buy the dip," some said, others said, "Get out now." It wasn't just charts bleeding, it was minds, and when minds panic, the crowd stampedes. Every red candle amplified the hysteria. Traders didn't wait to understand, they reacted to each other, and the emotional contagion spread like wildfire. In moments like this, it's not the smartest that survive, it's the calmest. Bitcoin was supposed to be the safe haven, the digital answer to gold, but when war came knocking, it faltered. Meanwhile, real gold surged. Why? Because trust isn't built in a bull run, it's built in centuries. And physical gold has been the flight-to-safety asset for over 2,000 years. Bitcoin, despite its promise, is still earning that reputation. This was the moment Bitcoin's identity got questioned. A currency born in rebellion, shaken by reality. And just when you thought it couldn't get worse, centralized exchanges started to freeze. Withdrawals halted, websites lagged, support lines went silent. Suddenly people realized the hard truth. If you don't own your keys, you don't own your crypto. Those with cold wallets, safe, everyone else, trapped, watching, refreshing, waiting. This wasn't just a price collapse, it was a custody crisis. While chaos unfolded, governments watched from the shadows. And then, they stepped forward. Crypto suddenly found itself labeled a national security threat. Concerns about sanctions evasion surfaced. Wallets once considered private were traced, tagged, and targeted. The era of anonymity took a hit. The free nature of Bitcoin became its liability in the eyes of global regulators. In crisis, power consolidates, and decentralization becomes the enemy of control. Even DeFi, the great hope for financial autonomy, struggled to withstand the blast wave. Price oracles failed, stablecoins slipped their pegs, liquidity vanished, entire ecosystems dropped by 50% in a single night. The promise of trustless systems was real, but their emergency brakes, missing. There were no circuit breakers, no humans to call, just broken code. This was the warning. DeFi may be decentralized, but it's not disaster-proof. And then came the silence. Bitcoin didn't just lose value, it lost its aura. The digital gold story? Cracked. The anti-establishment hedge? Under review. What emerged was a new narrative, one where Bitcoin isn't the lone wolf. It's part of the broader risk ecosystem, interconnected, vulnerable, watched. This isn't bad, it's evolution. But it means we can't treat Bitcoin like mythology. We have to treat it like strategy. After 3 brutal days, Bitcoin found its footing. Around $89,700, the bleeding stopped. On-chain data showed whale wallets re-entering. Institutional buys trickled back in. Calm began to replace chaos. This wasn't recovery, it was consolidation, the start of the rebuild. For those who held strong, it was vindication. For those who fled, a chance to rethink everything. In the ashes, the smart money moved back in, quietly, strategically. If there's one thing this crisis made clear, it's that crypto is no longer just about price. It's about power, politics, and preparation. If you want to survive the next storm, you need a wartime crypto plan. That means cold storage, that means stablecoin reserves, that means knowing when to move and when not to flinch. It means mastering emotions, not chasing candles. It means treating Bitcoin like the volatile global asset it is, not the fairy tale some want it to be. Bitcoin didn't die, but it bled. And from that blood, a new generation of crypto warriors was born, sharper, stronger, and ready for what's next. If you found this breakdown helpful, subscribe, drop a comment, and share it with someone who needs to hear it. And remember, markets recover, narratives evolve, but strategy is everything. This is Web3 exclusive, and we'll see you in the next one.